Hi everyone, welcome. Thanks very much for joining us this evening. We're going to go ahead and get started. It looks like the vast majority of the participants that have been invited and who RSVP'd to the webinar have joined us. And, you know, bottom line, we think that we've got a very interesting and provocative webinar for you tonight. It really is focused on USDA results as well as FBN results and a new FBN crop marketing initiative. And to start off first, just in terms of agenda and what we're going to cover, we're going to focus first on the USDA report most recently. We're also going to talk about the Pro Farmer Field recap, which is going on now in most of the Midwest. We'll talk again about the FBN poll results that were sent out on Tuesday and what they actually mean in the context of the USDA report. And then we'll talk about what that actually means in the context of what FBN is bringing to the market as well. So by way of doing that, I am going to introduce a special guest joining us here tonight in the webinar, Kevin McNew, who is president of GeoGrain and GrainHedge, a combination data platform and brokerage service, is also a recognized expert in both commodity markets as well as local cash markets. Kevin's also a frequent contributor and commentator to Bloomberg News, Reuters, and AgWeb. And he has the credentials to back all that up, given his Ph.D. in economics and also years of experience being a professor in commodity markets and cash markets as well. For those of you who don't know Kevin, you'd like to know that he also grew up on a farm. He grew up on a farm in Oklahoma and has spent all of his career focused on and working in agriculture. So I'm going to pass the baton here to Kevin and let him talk about the USDA report review and take it from there.
Great, thank you, Larry. I really appreciate the opportunity to chat with people. Let's start first of all with the USDA data that came out in August, and that number on corn and beans was mildly disappointing. Certainly, we had trade that was looking for a 166 corn number, USDA through 169.5 in beans. Trade was looking for about a 47 bushel an acre yield number. USDA came at 49.4. And really, the market reaction's been nothing but sort of negative since that August 10th report. It's been a steady downhill slide in corn. Beans has managed to claw back a little bit. Today we were up 8 on some good export news. And we clawed back about 25 cents off the lows. But really, we're in a situation where, first of all, people are questioning the USDA data, and secondly, we're looking at a balance sheet that looks to be pretty burdensome in terms of carryout. So, the trade was really looking forward to this week's Pro Farmer Crop Tour, and what we found as Pro Farmer scouts canvassed the fields from South Dakota to Ohio were numbers that were slightly lower in many cases to USDA. Not substantially so, not enough to really change the attitude of the overall market. As you market observers would have watched this week, it was just a steady downhill slide in the case of corn. But when we look at sort of the state-by-state breakdown of what Pro Farmer's been finding so far, and we don't have the latest states for Iowa and Minnesota, they'll be out later tonight, but if we look at the states they did early in the week, Illinois coming in at 181 versus USDA at 188. Pro Farmer found Indiana to be 171 versus USDA at 173, and Ohio 165 versus USDA at 171. So, overall, over some of the key growing areas, the numbers were slightly less than USDA. Now, Pro Farmer has no better crystal ball than USDA, so that's not to say they're better than USDA by any stretch of the imagination. But the market reaction this week was pretty telling that I don't think the market really sees any sort of sizable changes in those August forecast numbers. Yes, we'll dinker at the margin on them as we go forward until we get a final number in January, but overall it's not looking like we'll see dramatically different results. On the other hand, we did get data from you guys, the FBN poll that went out on Tuesday, and that was sort of insightful to look at as well. So we sent out the FBN poll on Tuesday. We got back 1,277 responses representing about 3.7 million acres. The data science folks here analyzed that data and basically compared what you guys said in your poll to what you actually had in your enterprise yields through FBN, and did basically a percentage change comparison. And so what you guys showed in terms of year-on-year changes were a little less optimistic or a little more pessimistic than what USDA said. So if we look at the key states of Illinois, Indiana, and Iowa, so in yellow you've got the percent change year-on-year for the FBN poll farmers, and in green you have the USDA percent change year-on-year on yield as well. So you'll see Illinois, you guys expected a 10% drop in your production or your yield. USDA had factored in a 5% drop. In Iowa, Iowa FBN farmers forecasted a 12% drop in yield, USDA only factoring in a 7%. So pretty much a similar situation where you're leaning a little more to the downside than USDA's 169 numbers. So, overall, when I sort of look at all this data from the FBN poll, when I look at what Pro Farmers said, we're looking at satellite imagery data and what those potential numbers say, I would tend to believe that the final number will be somewhere between 165 and 170. It's not going to be earth-shattering one way or the other. If I had to pick a number and stick with it right now, I'd say it's 167. The bottom line is that probably keeps us in a situation of very large carryout. The carryout will probably be over 2 billion bushels on new crop corn, and that will keep the market in somewhat of a defensive territory. On the other hand, when we look at sort of yield across the U.S., and again, this comes from the FBN poll. These are interesting maps that the data science team here at FBN put together showing year-on-year changes in yield, red being big losses in yield, green being better yields than last year. What you can see is a fairly intense situation in the western corn belt, not surprising given the weather pattern we saw in June and July, where it was hot and dry in the Dakotas, stretching down into Nebraska, even parts of western Iowa. So judging by this map, we would expect to see some yield cutbacks in the western part of the grain belt. I think that's going to lead to better basis opportunities. This year, the old crop situation has been pretty dismal for North Dakota, South Dakota, and Nebraska. That we've not seen much good opportunities in terms of basis. I think that's all going to change as we get into the new crop, because I think the paradigm is going to shift west to east, where the west may be a little shorter and the east may be a little more burdensome in terms of carryout. So that's something to keep in mind as we move forward into the marketing year. Let's talk about some of the things you can do as we get closer to harvest. There's a lot of things we can do at the margin that can help improve your bottom line. So I'm going to share with you a couple of insights that come from the FBN data. 20 years of history we have built into this platform on 4,500 different markets. And I want to share with you some of the key things that we know about grain marketing at a local level. And the first thing I want to share with you is what we know about forward contracting as it relates to your local basis. And in particular, I think everyone knows that if you're gonna sell on the spot market, you don't want to do it at harvest. Harvest is always the weakest basis. But here's an insight that not many people know about, and that is if you forward contract and lock in basis, chances are that basis you're locking in is going to be discounted compared to what you would have gotten if you'd have delivered it at the spot contract. And so what we did with this FBN data that's built into profit centers, we looked at 10 years of history on these 4,500 different buyers and compared how does their January spot basis compare to taking a forward contract for January delivery. And again, we're only looking at the basis component of this decision. So again, 10 years of history, 4,500 buyers, a lot of data going into this, but the key result is that if you're locking in basis on a forward contract, you're paying a discount, or you're getting paid a discount versus selling at the spot market in January. And this bar chart shows you that discount that's being taken off of your price if you're locking in, for example, a January contract in October, chances are you're going to see about a 9-cent lower basis in that contract versus if you'd have delivered it on the spot in January. So that's an important way to manage your marketing. What that tells me is if I'm a marketer and I'm trying to figure out how to maximize my potential, I don't necessarily want to do a forward contract with the grain buyer. I might want to do an HTA because that basis is likely going to be better on spot delivery than if I'd have locked it in with a forward contract. So use that HTA tool. We know a lot of farmers like HTAs because they are allowing you to lock in the futures price when the opportunities arise. So that's insight number one. Insight number two, I'm going to get to in a minute, but first, when you first started, we asked you a poll about how many markets you sell to, and I appreciate you all taking the time to respond to that. And I've given this talk a number of times over the country, and your numbers are not any different than what I've seen when I've given this talk at Pro Farmer workshops or Farm Journal workshops or wherever. Generally speaking, the majority of farmers sell to 1 to 2, maybe 3 to 4, but you don't find people selling to many more buyers than 4. And in this case, you guys are sort of lining up there. It looks like 93% of you selling to 4 or less buyers over the course of the year. And that's not a bad thing. It sort of depends on where you're at and what your opportunities are. But I can tell you from the FBN Data and Profit Center, we have the ability to look at how many buyers should you potentially be selling to. That is a question we can answer with this data set that's rich in terms of its depth, 4,500 different buyers. We have an extensive database going back 20 years. And what we've found, if you just look at the last marketing year, and I can tell you from being in this business for 20, 30 years, that this last year was not a particularly volatile year when it came to basis, especially in the Western Corn Belt. You know, we had a lot of situations of basis being fairly flat, not a lot of urgency in terms of sourcing grain from farms. So we didn't, in fact, have a very volatile year in basis. But if you look at last year's corn market situation, what we found was that farmers in the key grain belt states, from Missouri all the way up into Minnesota and the Dakotas, they were probably selling to, if they were optimizing their selling, that is, looking at the basis and adjusting for freight to their farm, they would have been selling to about 5 to 6 markets over the course of the season. In the southern part of the country, into the eastern corn belt, that number's around 3 to 4, and you can see in the fringe areas, the mid-Atlantic, the southeast, where there's very limited market competition, you see only 1 to 2 markets. What that tells me is you can improve your bottom line by looking for opportunities throughout the season. And FBN has a great tool in Profit Center to help you find those opportunities. On average, what we found last year in corn was an 11-cent per bushel increase over your local price, even when you account for the cost of hauling that grain. So you can improve your bottom line by just simply doing some more shopping and looking for these opportunities. So that is, yet again, another way you can improve your bottom line. So again, just to recap, you know, I'm not very bullish on the upside here in the corn market or the bean market with the way the situation is. I think we're going to need to prove the yields. We're going to need to see some demand growth. I'm not sure we have a huge downside risk in the case of corn from where we're at today, but I don't think we're going to, climb sharply higher. So, it's going to be one of these situations where you're going to need to look at your storage. You're going to need to look at your opportunities in your cash market to try and improve your bottom line. We've given you some insights today how to do that. One is not necessarily forward contracting, but maybe using HTAs. And secondly, obviously shopping those opportunities in your local market and looking for them. So I'm happy to turn it back over to Larry, and he's going to talk about some of the things going on here at FBN.
Great, Kevin. That was great. Thanks very much. So folks, this webinar really is as a result of your interest and your questions in and around how FBN can help improve crop marketing. And this is really one of the top requests that we've received from farmers and growers in our network really since day one. Now, many of you who have been a part of the network for years now know that we started out innovating in and around agronomic data. and the agronomic farmer-to-farmer network that we've built now is vast, covering around 17 million unique acres across the United States. And really the focus there was to create more independence for the farmer and to drive more profitability. And one of the big features in products that many of you know very well and use significantly is the FBN Seed Finder, which allows farmers to choose the right optimal seed and highest performing seed by soil type and climatic condition based on where you're located. In addition, since that time, we've innovated and taken that one step further based on requests to help farmers and producers lower their operating costs through inputs. And many of you on this call are actually participating in our FBN Direct program, which again uses and leverages data and information to source and procure and bring manufacturers together with farmers directly at the farm gate in a way that we deliver ag chemicals, seed treatment, and now starter fertilizer directly to the farm gate for significant discounts. Well, today I'm here to tell you about the next logical extension of the FBN platform, which is called FBN Crop Marketing, which again is by request of thousands and thousands of farms across the United States that are in the FBN network. And owing to the overview that Kevin gave around cash prices, and FBN Profit Center, really we're pleased to announce today a new product called the Independent HTA, which really allows the farmer to untether themselves, to unlock themselves from their existing infrastructure and elevators in a way that never before was possible. And as many of you know, traditional forms of HTAs fix the delivery of the actual contract and the grain and the bushels to one specific location. And really what we're doing with the Independent HTA is creating vastly more flexibility by enabling the farmer to effectively to deliver to whatever location and whatever elevator facility that works best for them and garners the best cash price on that HTA contract at the time of delivery. So our view is, and this is based on really 20 years of historical information and data on the 4,500 cash markets across the United States, is that by untethering the HTA contract from the traditional sources of those contracts and those facilities, we can make producers more profitable with an independent HTA. And so really the key differences are either the farmer or the producer can select the specific facility that they want to deliver to that has the best or optimal cash price at that time, or alternatively, FBN can work to negotiate a better cash price at the maturation of that contract on behalf of that farmer. In each of these cases, the independent HTA operates and works almost the same as a traditional HTA in the sense that FBN has actually taken a position on the margin. So we have our own margin account. We're an actual grain buyer in the vast majority of states where we operate today. And what that means is that FBN can use and leverage its own capital to help the farmer unlock themselves from specific facilities when they contract on an HTA. So the real value here is creating much more flexibility at the time of delivery in a way that improves the cash-based price and overall net price delivered to the farmer for that HTA. Now, here's an example in this next slide of actually how this works. This is an actual real-world example from real-world data that we have focusing in Iowa, but obviously this is extensible to any of the key markets where we operate today. We see the same dynamic. Now, this is a farmer in central Iowa, and he's near three major grain buyers. Cargill, Flint Hills Resources, which is an ethanol plant, an LDC, which is a dry fish plant. And the farmer wants to lock in a futures price in October. And so this is an example that shows October 2016, where the local cash basis price that it was optimal at that time, at or around harvest, the best facility was the LDC facility, where it had a negative 37-cent cash basis price. So at that time, in October 2016, the farmer establishes an HTA, and he effectively chooses the LDC facility at 37 cents negative on the margin basis. Now, in March of 2017, when the contract becomes mature, the actual facility basis at that point is significantly different because of fluctuations in supply and demand in that local market. And what you see is just actually the opposite here in March of 2017. The best facility to deliver to at that time actually is the Cargill facility. And the LDC facility at that time is the worst place to deliver to capture the best net cash basis at that time. So in this situation, if the farmer had an independent HTA, he would choose the Cargill facility at a negative 30-cent basis, and he'd be in a position to lock in 9 cents of extra profit per bushel. But instead, with a fixed HTA, this farmer was stuck with having to deliver to the LDC facility, and he lost 9 cents per bushel on that trade because there was no ability to flexibly rotate out of that facility into an independent hedge-to-arrive. Now, the key benefits of the FBN iHTA are, look, we can provide more marketing flexibility. We've talked about this before. Farmers have the ability to deliver to the grain market that is most profitable at that time, at the time of the maturation of the contract. It reduces the need for rollovers. One of the things that we see consistently is that farmers find themselves jammed in having to deliver to a fixed location, and that location's basis price at that time is not good, and so they choose to roll over that contract as a result of the local cash price not being good. And as a result of having to roll it over, they're charged additional cents per bushel as a result to roll it over to a subsequent period. What FBN does here, and this is really the key, is this is all technology enabled. So we use the newly launched FBN Profit Center, which takes 4,500 market prices in real time into our application and gives farmers real-time visibility into local cash basis prices at that time. We do this both through the FBN account online through the desktop, and we also do that through our mobile application, which is live as well. In addition, what we do is provide real negotiation power. So we have experienced grain buyers on our staff, and they negotiate the final basis price on your behalf. Sometimes we can collectively market grain to get a better cash basis price above and beyond, what is published locally in that local market. And so farmers still do reserve the right to negotiate the final basis price on their behalf, but at least with an iHTA, it unlocks or provides better flexibility on that delivery location in a way that previously and never before was really possible. Folks, the whole emphasis and focus here, just as we've done on FBN Direct and what we've done in our core agronomic product, is to put more power in your hands. And the way we do that through the iHTA is to effectively allow you to control more of your bushels, to control those bushels in a way that we really think over time enables you to become your own elevator. And many farmers that we've spoken to are headed that direction anyway, but don't have the financial instruments necessary to do that. or at least until now, didn't have the ability to do that on an iHTA. So we wanted to share this new product and initiative with you because it fits squarely within our mission and values as a company in making farmers more profitable, making them more independent, and alleviating their dependency on the existing infrastructure for their success. So bottom line, folks, we've got the ability to contract on iHTAs today. If you are interested, there's two ways to follow up with us. One, we have private chat available through this application, as you've seen in your window here. If you chat your cell phone number, we'd be happy to get in contact with you either this evening or in the next couple of days. And then separately, we'll follow up with you via text message to see if you have any interest in participating in this as well. And what I will say is that members who are interested in the iHTA will receive a individualized analysis of their historical basis price shifts in your area. So again, the key thing here is that this is based on 20 years of historical data. The data that we've looked at in our rocket science team of data science experts have done is really look at that data in detail. And the data is pretty shocking in that there are dramatic fluctuations in cash price across the United States. And so we want you to take advantage of that. All of this information daily is available through Profit Center. And at the same time, this individualized report is available as well. It's going to be customized for your specific location in an area. So with that, we wanted to make this quick and to the point and very streamlined. We appreciate your time and attention. We would like to remind you that farmers can ask questions via the chat feature, and we can stay online and answer some of those questions. And then we have the ability to follow up with you directly to answer any specific questions that you might have about the markets, or alternatively, the iHTA product that is now live and available. Okay, everyone, we're going to give you a few minutes to send in questions. We will stay on the line here, and then we'll do our best to answer these questions here. So we'll give you 2 or 3 minutes here to pose some questions, and then we'll come back online to answer some of them. Okay, folks, thanks very much. We've got a fair number of questions here. The first question is, naturally, what does this cost? So in the near term, the cost is 3 cents for December corn and 4 cents for beans. That's the first question that we got. The next question is, how complicated is this to set up? And I'll have Kevin sort of answer that question.
Yeah, thanks, Larry. I mean, it's really pretty straightforward to set up. We just want to talk to you. make sure you understand the nature of what we call the freedom option, the freedom and the flexibility to go to any buyer at the end of the day. So, it's going to be a pretty simple process. I've got another question here that says, if I'm interested, do I have to price the grain right now? Absolutely not. We understand, market activity, especially in corn right now, is not the most favorable. So, by all means, reach out to us and we will talk to you about the situation. We can get you set up. And we can start to place limit orders, or what you might think of as wish orders. If the market gets back to 380 Ds corn or whatever, we can start to work with you on pricing. So, by all means, we don't have to do a transaction today, but we'd like to hear from you so we can get the initial paperwork done to get you going on it once the market does turn around. I think the other question we've got here is, who does the final negotiation on basis? As Larry said during his discussion, it can be the farmer himself. It can be us at FBN. We're going to basically work with the farmer to, first of all, monitor basis in his local area. Just like we said in our discussion, there's a lot of moving opportunities in basis over the course of the season. We're well equipped to handle those opportunities in terms of seeing them. And obviously, when you guys are out farming and doing your planting and things like that, that's generally speaking when the basis is moving the most, is when you guys are not in front of a computer watching these things. So you can rest assured that we will be watching them and we'll be reaching out to you. So we can negotiate, we can help you find those opportunities. It's really sort of your call at that stage. So another question we're getting, how does FBN find the best prices? Quite frankly, we got, these 4,500 markets we're getting on a daily basis. We have the intelligence set up to calculate the driving miles from your farm to every market in our platform. And obviously we'll work with you on what your cost of hauling grain is, what your cost of storing grain. So all that gets stored into our platform to help us know precisely what are your best opportunities. So when we present you an opportunity, you're going to know net of freight, net of storage, this is what it is, based on my personal situation, here's how much money I can expect on this transaction. The other question we're getting here, I see, do I only have to sell to markets that are in profit center? Absolutely not. In fact, we'd like to hear about that. If you see markets that are not in profit center, reach out to us and let us know that. We'd like to know that as well. We're trying to be as comprehensive and drive transparency into this marketplace as best we can. So please, by all means, reach out to us on that.
Great, everyone. These are great questions. We'll take a couple more. We'll wait here just a couple more moments. If there are any additional questions, we'd be happy to take them. We'll take two more if you have them, and we'll give you a couple of minutes here or a couple of moments rather to come up with them. Great, guys. Thanks very much for the questions. The first question is, do you offer minimum price contracts as well? And the short answer, the simple answer is yes. So those contracts are available as well, and the mechanics of them work almost identical to the independent HTA. We'll deliver to the location that has the best cash price at that time, and it will use the same network-based data and analytics across the 4,500 plus markets and buyers in our system today.
The other thing I would say, Larry, is we got a question here about which years are we doing right now. We are doing the 2017-18 crop year. Shortly as we get further past new crop harvest, we'll be looking at 2018-19 crop years. But right now we're doing 17-18 deliveries.
Another great question that came in is, what crops are you offering contracts for? This is a great question that will be answered in two parts here. So for the iHTA and minimum price contract offering, we're currently focused on corn and beans, and then wheat will come shortly thereafter. Now, what we haven't mentioned, just because of brevity in the call here, is that we actually have specialty contracts available as well. And the specialty contracts that we have available are on conventional corn and beans, dry beans and lentils, pulse crops, specialty wheat varieties, and the like. And that's where buyers are coming to FBN Direct and asking to contract directly with our network. And so we're facilitating that contracting, and in some cases offering cash advances on those specialty select market opportunities. Great. Well, thanks everyone for your time tonight. We hope you found it valuable. Again, if you are interested in working with us on contracts, we'll follow up with you via text. And if you wouldn't mind private chatting us your cell phone number, we'd be happy to follow up and answer any additional questions about how to go about doing it. Thanks very much, and we'll talk to you soon, we hope.